Snap earnings and revenue both coming in below expectations. A 2-cent per share loss. That's double the loss anticipated. While revenue $1.1 billion is a hair short of the $1.14 billion that analysts had estimated. Now, the company's daily active users growing faster than expected. Snap adding 15 million daily users in the quarter for a total of 347 million DAUs. Snap also announcing a $500 million stock buyback plan. So we got, for guidance, no top or bottom line guidance for the third quarter. The company does usually give some guidance, but Snap estimates that daily active users in the third quarter will be 360 million in Q3. That is 5.5 million more than analyst consensus. But there is some guidance in a little bit of a revenue guide here. The company warning that so far this quarter, revenue is flat year over year. That's a big disappointment from the 18% revenue growth that the Wall Street was projecting for the entirety of Q3, and is certainly way down from the 50% year-over-year growth that investors had become accustomed to over the past 5 years. That's the average over the past 5 years. Now, that downfall, that downturn is blamed by Snap on platform policy changes. Of course, that's referring to Apple. Also increased competition and then macroeconomic challenges. You see shares are now down 17%. Scott?
So let's get into a couple of things here that I notice that maybe you can speak to. Average revenue per user, the estimate was $357. They come in at $320. That's far below, obviously, where expectations were. And just to remind everybody, too, Julia, from what I have here, remember, last time they reported in April, they gave their guidance of revenue growth year over year of between 20 and 25%. They came out only a month later and cut that guidance. And Evan Spiegel at the time said they would miss. They'd be at the low end of the range. Not only did they not make the low end of the range, as the street was expecting 18, they're flat. That is an incredible disappointment for where the company even saw things.
Yeah, flat for so far in Q3, Scott. So I think it's really interesting here that CEO Evan Spiegel has taken a very different tone in this letter. He says that it will likely take some time before we see significant improvements. He says we are not satisfied with the results we're delivering regardless of the current headwinds, but he does lay out a couple of ways that they are focusing on opportunities to drive growth despite the macroeconomic pullback, talking about direct response ads and also how to better drive productivity. I know we've been talking a lot throughout the day today about companies either halting hiring or doing layoffs. He says they're looking at, quote, a substantially reduced rate of hiring and strict reprioritization of goals and initiatives across the company. So some commentary there about where it looks like they're going to be doing cost cutting. One other thing, Scott, Snap extended Evan Spiegel and his co-founders' contracts and announced that if the stock hits $40 a share, it'll do a split through a 1-to-1 dividend, though the stock is now at less than $13 a share.
Yeah, I see here they're going to cut back on hiring as well. Julia, thank you. We'll hear from you, I'm sure, before our show comes to an end. The headline really here. And Steph, I'll go to you, right? The headline, weakest ever sales growth, citing the digital ad spending slowdown. You own Facebook. Let's throw up shares of, I want to see just if there's anything in sympathy here of either Alphabet or Meta, because that's directly where you would see it if there is. And just that speaks to the environment, really, that we're in. This a weakening economy and fears of a slowdown in spending. And there you go. In the OT, you got Meta shares down 6%.
Yeah, well, okay, so there's a big difference in valuation between Snap and Meta, and that's one of the reasons why I favor Meta. And I also think that Meta has more size and scale. They've got 2 to 3 billion daily active users and monthly active users. While Snap did post better daily active users, everything else was not good, right? So I think that we've heard enough news, negative news from Zuckerberg and team. We already know that they have problems and they have to fix Reels, and they are doing it. But they also have Instagram. They also have WhatsApp. They also have Oculus. So there's a lot of drivers for the long term that I think this company can deliver over the long term, double-digit earnings and upper single-digit revenues. The valuation discrepancy is crazy, though, right? So Snap trades at 124 times earnings and Meta trades at 13. Meta trades at 7 times EV to EBITDA, which means they're profitable, and price to sales at 4 times. I mean, so Snap's not even profitable. So you can't even talk about that. And not only that, I want to see the free cash flow number at Snap, because it was expected to be negative, and I bet it is. Whereas Meta has over $24 billion in free cash flow. So there's different. You're talking about different apples and oranges. It's not that they're going to be immune from the slowdown in digital advertising, but I think there's a lot baked in for a high-quality blue-chip company in this sector.
Yeah, Dan Greenhouse.
And Steph, let me ask you a question. In an environment where the economy is weakening, and I have to be a little more closely watching where I spend my ad dollars, isn't it fair to say that a quote-unquote proven platform like a Google or a Meta is a better destination for my money than a Snap, which is disproportionately weighted towards a younger demographic, more crypto, those sorts of things? Isn't it an argument in favor of Meta?
Absolutely. The ROIs are crazy, and they're so much better than traditional advertising. Plus, Meta has 10 million advertisers, and they're not going away, right? So you just kind of have to step back and see which one you want to play. I get why people like Snap. The stock also, by the way, rallied significantly this week, so it's giving back all that and then some. But if this thing is down 64%, so I think it could be an M&A candidate at some point, in my mind. But from a fundamental point of view, Meta is in much better shape. Now, that's not going to say that they're going to have a great quarter. It's just, I think, longer term, they just have a better model.